Okay, let's unpack this. Over $450 million in collaboration payments. That's quite a headline figure.
It really is, especially for a company that, well, most people probably haven't even heard of.
Exactly. Operating in this space that feels like the real bleeding edge of science, tech, and biology fused together.
It definitely makes you think, doesn't it? What if the future of finding new medicines isn't just about labs and petri dishes, but also, like, supercomputers crunching data?
That's the big question. And it brings us to today's deep dive. We're looking at Recursion Pharmaceuticals, ticker RXRX.
Right. They're a key player in this tech bio space, as it's often called. We're aiming to really understand what they're about.
Right. How they're trying to, well, revolutionize drug discovery, what their financial situation looks like, and how the market views them.
We've dug into a pretty comprehensive analysis looking at everything as of April 27th, 2025.
So that includes their business model, who's running the show, the financials, market sentiment, ownership.
And importantly, the risks they face. All the key pieces.
And our mission today, really, is to cut through all the jargon and complexity.
We want to get to the core value proposition for you, the listener. What does Recursion actually do?
How sustainable is their approach, really?
Mm-hmm.
And what are the most important things you need to watch?
We'll pull out the key nuggets, the essential takeaways, so you can grasp what this company's about without getting totally bogged down.
Okay, so let's start right there, Chapter 1. Business understanding. What exactly is Recursion trying to do?
Well, as we said, they're a tech bio company. And in simple terms, they're trying to industrialize drug discovery?
Industrialize it.
Yeah.
Like an assembly line for new medicines.
Kinda, yeah. Bringing that tech industry efficiency and scale to what's traditionally been a very slow, often unpredictable process.
How do they actually do that?
Through their core platform, which they call the Recursion OS. Think of it as a combination of things.
Okay.
Massive automation in their labs. We're talking millions of automated wet lab experiments every single week.
Millions. Per week.
Yeah, it's hard to even picture the scale. And then they couple that with some serious computing power.
Like their supercomputer.
Exactly. Their BioHive 2 supercomputer is apparently one of the top 100 globally. It's essential for handling the sheer volume of data they generate.
Right, because all those experiments create just mountains of biological data.
And that data is the fuel. It feeds their artificial intelligence, their machine learning algorithms. They're looking for hidden patterns, insights into complex biology that you might miss otherwise.
And they generate these massive proprietary data sets themselves. That seems key.
It's a huge part of their strategy, but it's not just for their own internal drug pipeline.
Right, the partnerships. That's where the money comes in, initially at least.
Precisely. They collaborate with major pharma companies, think Bayer, Roche via Genentech, Sanofi.
And that's where that $450 million plus figure comes from, historical payments.
Yes. These deals typically involve upfront cash when they sign, then milestone payments as projects hit certain R&D targets.
And then maybe royalties way down the line if a drug actually makes it to market.
Exactly. So while $450 million sounds like a lot, and it is significant validation, you have to remember it's often backloaded and depends on future success. It's not guaranteed profit yet.
Got it. It shows Big Pharma is interested, but the proof is still in the pipeline, so to speak.
Well put. And speaking of the pipeline, they do have their own drug candidates moving forward to make this more tangible.
Okay, like what?
One to watch is REC-4881. It's for a condition called FAP familial adenomatous polyposis.
Right.
It's in phase 1b/2 trials, and it's got both FDA fast track and orphan drug status.
Which basically means the FDA sees its potential for an unmet need and offers incentives, right?
Exactly. Helps speed things along if the data holds up. We might actually see some data at Digestive Disease Week this year, 2025.
Okay, what else is cooking?
There's REC-994 for CCM, cerebral cavernous malformation. That finished phase 2, showed decent safety and, well, some potential hints of efficacy.
It's good, but still early days.
Very much so. Then REC-617 for solid tumors, that's in phase 12, also showing some, quote, early promising signals.
Lots of early and potential here, which is typical for biotech, I suppose.
It is. Another one is REC-1245, targeting specific types of solid tumors and lymphoma based on biomarkers. That's just entering phase 12.
And they're talking about speed with that one.
Yeah, they mentioned a target of 18 months from identifying the drug target to being ready for human trials, which is significantly faster than the industry average of maybe 42 months.
If they can actually pull that off consistently, that would be a game changer.
It absolutely would. And finally, there's RECN 3964 for recurrent C. diff infections. That's heading into phase 2.
So a pretty diverse set of targets, rare diseases, oncology, infectious disease. Where do they sit in the market landscape?
They're definitely positioning themselves as a leader in this tech bio niche, and that big merger they did recently really solidified that.
Right, the Exscientia deal, that
Okay.
was huge, wasn't it? Around $688 million.
Yeah, reportedly the largest tech bio merger to date. It's a significant consolidation move,
What's the thinking there? Combining forces.
potentially very complementary tech. Recursion is maybe more focused on the biology side, generating that massive data. Exscientia has been strong on the chemistry and automated drug design side.
So put them together, and maybe you get a more complete end-to-end platform.
That seems to be the hope. Create something more powerful than the sum of its parts.
Makes sense. And size-wise, how big are they now?
Around 800 employees. Market cap floats around, say, $2.3 billion currently.
Which, for context, is tiny compared to giants like Regeneron or Vertex.
Oh, absolutely. But it puts them in the same ballpark as maybe CRISPR Therapeutics or Viking Therapeutics, other sort of innovative biotechs.
So boiling it down, their main value proposition is what?
Radically improving drug discovery, making it faster, more efficient, increasing the odds of success.
Using data and AI to tackle complex diseases that have been tough nuts to crack.
Exactly. And offering that platform capability not just for themselves, but for partners too.
Okay, quick recap of Chapter 1 then. What do? How do they make money?
They're a tech bio firm using a big data, AI-driven platform, the Recursion OS, to find drugs faster. Revenue comes from pharma partnerships, upfronts, milestones, potential royalties, and developing their own pipeline.
Got it. Let's move into Chapter 2, management. Who's steering this ship?
The CEO is Chris Gibson, one of the co-founders. He's got a technical background, bioengineering, actually started an MD-PhD program, but left to focus on recursion.
So definitely deep in the science and tech side.
Very much so. He really emphasizes the data-driven approach, that tech bio culture. He led them through the IPO, those big partnerships, and now this Exscientia merger.
Any potential flags?
Well, he has acknowledged some, let's say, early growing pains with people management as the company scaled rapidly. And as we'll discuss more later, the company has had some recent earnings misses, and the stock hasn't performed well lately.
Managing rapid growth in such a complex field is definitely tough.
Yeah.
What about the broader team and the board? Are they bringing in industry veterans?
That seems to be a key part of their strategy lately. They've made some really notable hires.
Like who?
Mijat Khan came over from Johnson & Johnson. She's now Chief R&D and Commercial Officer. Huge experience there in pharma R&D and data science.
That sounds like a big get.
Definitely.
Yeah.
David Morrow joined as Chief Medical Officer, decades of oncology drug development experience from places like Merck, BMS, Kevin Lynch from AbbVie, chemistry leaders from Pfizer, Lilly.
So bolstering the drug development and commercial side makes sense as they mature.
And crucially, on the regulatory front, they added Namanje Bumpus to their board.
The name sounds familiar. Former FDA.
Yeah, former principal deputy commissioner at the FDA. Having that kind of insight on your board is, well, incredibly valuable in this industry.
No kidding. That's a very strategic move. What about finance?
They brought in Elaine Sun as CFO. She's got experience from Mammoth Biosciences, Halozyme, Vaxcyte, strong biotech finance background.
So it really looks like they're consciously blending that initial tech-academic founding team with seasoned pharma, regulatory, and finance expertise.
Exactly. You probably need that mix to navigate the path from a cool platform to actual approved drugs.
How has management handled bumps in the road? You mentioned earnings misses, but have there been other crises?
The sources don't detail like major scandals or anything, but we can see how they've navigated things like the volatile funding climate for biotech generally.
Right.
They restructured their deal with Bayer at one point. They managed the complex Exscientia merger. And yeah, when earnings have disappointed, the communication tends to focus on the long-term strategy, pipeline progress, trying to keep investors focused on the bigger picture.
Okay. How transparent are they overall? Do they communicate well?
They seem pretty active. Regular press releases, investor decks, SEC filings, the quarterly earnings calls, standard stuff.
Anything unique?
Well, they have made some data sets open source, like one called RXRX3. That's relatively open for this industry.
That's interesting. Build some goodwill, maybe.
Potentially. Of course, there's always a limit, right? They're not going to give away the crown jewels of their proprietary AI or discovery methods due to competition.
Naturally. What about their ethical reputation? Any red flags there?
Nothing major noted in the analysis we reviewed. They talk a lot about their mission, helping patients. They publish ESG reports, environmental, social, governance.
And adding that former FDA official to the board probably helps project an image of ethical conduct, too.
You'd think so. Reinforces commitment to doing things by the book, especially regarding clinical trials and regulations.
So let's circle back. Key question for management. Honest, capable, shareholder-oriented. What's the verdict?
Honesty. No indications otherwise. They seem pretty upfront about goals and challenges. Capable. On paper, definitely. The team blends impressive tech and industry experience.
But the jury's still out on ultimate success.
Absolutely. Capability is ultimately proven by getting drugs approved and to market. Shareholder-oriented. Well, the big strategic moves like partnerships and the merger suggest they're trying to build long-term value. But the stock performance has been negative, and there has been insider selling, even if planned. So shareholders who got in earlier haven't seen positive returns yet, despite those efforts.
Okay, that makes sense. Let's shift gears to Chapter 3, Financial Health. This is often where the rubber meets the road for biotech.
It really is. So key metrics first. Market cap, as we said, around $2.3 billion.
PE ratio.
Yeah.
Probably not applicable.
Exactly. They're losing money, so PE is negative, both historical and forward-looking. Not a useful metric here.
Okay. Revenue growth, is that looking positive?
It's been choppy. Fiscal year 2024 saw a big jump, up 32% year over year to about $59 million.
But wasn't that skewed by a milestone payment?
It was. A $30 million payment from Roche was a huge driver. If you look at just Q4 2024, revenue was actually down over 58% compared to the previous year's Q4.
So highly variable depending on those partnership milestones hitting.
Precisely. Historically, it's up and down. Analysts are forecasting strong growth for 2025 and 2026.
There's a wide range of estimates.
A very wide range, yeah. Reflects the uncertainty. It's hard to predict exactly when those milestones will hit or if new deals will land.
Gotcha. Profitability. Are they making money on the bottom line?
No, not even close right now. Profit margins are deeply negative across the board. Gross, operating, net.
Consistently negative.
Consistently negative, yeah. Operating margin was around minus 814%. Net margin minus 788% for the trailing 12 months ending December 24.
Wow. Why so negative? Just massive R&D spend.
That's the main driver. They are investing heavily in building out that Recursion OS platform, running those millions of experiments, advancing the drug pipeline.
It's like building a giant, very expensive factory before you've sold many products.
That's a good analogy. Huge upfront investment phase. The costs are front-loaded. The revenue hopefully comes later.
Okay. What about debt? Are they loaded up with loans?
Actually, no, that's a relative bright spot. Their debt-to-equity ratio is very low, like maybe 0.1% or even less, based on some sources.
So they have way more cash than debt.
Significantly more cash than debt, yes. This suggests they've primarily funded themselves through selling equity like the IPO and those partnership payments, rather than borrowing heavily.
That provides some stability, at least on the balance sheet side. But what about cash flow? Are they burning through that cash quickly?
Ah, yes. That's the flip side. Their free cash flow is consistently negative, and the burn rate, the amount of cash they're using, has actually been increasing.
How much are we talking?
For the 12 months ending Dex 24, free cash flow was negative $373 million, roughly. They burned through about $359 million just in operating activities in 2024.
So even with low debt and cash on hand, that cash pile is shrinking pretty fast.
It is. The clock is definitely ticking. They need to either reach sustainable revenue, secure more non-dilutive funding like partnerships, or potentially raise more capital down the line.
Which usually means selling more stock.
Often, yes. What about their working capital? Do they have enough short-term assets?
Yeah, their current ratio and quick ratio look pretty healthy, like 3.8 and 3.4 respectively. That suggests they can cover their short-term liabilities comfortably for now.
Right. But again, that's set against the backdrop of the significant ongoing cash burn.
One last metric, price to book. What does that show?
It's around 2.2x. This compares market value to the net asset value on their books.
Is that high or low?
It's relatively low compared to where Recursion has traded historically, likely reflecting the stock price decline. Sometimes a low PB suggests undervaluation, but here it's probably more about the market adjusting expectations given the cash burn and timeline to profitability.
Okay, so wrapping up financials. Not profitable, burning cash significantly.
But they do have a relatively strong balance sheet for now, thanks to cash reserves and very low debt.
It's a race against time,
You
essentially.
can definitely see it that way.
All right, fascinating stuff. We're going to take a quick break here. When we come back, we'll dive into how the market perceives Recursion, who owns the stock, and the key risks involved. Stay with us. End of first half. Start of second half. Welcome back to our deep dive on Recursion Pharmaceuticals. Before the break, we covered their business model, management, and financials. Now let's get into Chapter 4, Market Sentiment. How is the market feeling about RXRX?
Well, polarized is probably the best word. There's definitely a lot of excitement.
Around the AI potential.
Exactly. The whole idea of AI revolutionizing drug discovery is a hot theme, and Recursion is often right in the middle of that conversation. Those big partnerships, the Exscientia merger, that stuff generates real buzz.
But there's a but, isn't there?
There is. There's also significant skepticism, mainly focused on that profitability question we keep coming back to. Can they actually turn this cool tech into a sustainable, profitable business? And when?
So it's high hopes versus hard financial realities.
Right.
How does this play out in the stock price? Is it volatile?
Oh, extremely sensitive to news. It's quite striking.
How so?
Positive news, a partnership milestone hit, good early clinical data, anything validating the platform like the NVIDIA investment. You often see the stock jump significantly.
In the downside.
If they miss earnings estimates or if clinical data comes out ambiguous or negative, the stock can fall sharply. It's very much seen as a high-risk, potentially high-reward play.
So not for the faint of heart.
Mm.
What are the Wall Street analysts saying? Do they offer any clarity?
Not much clarity, honestly. The price targets are all over the place.
Really, like what kind of range?
We're talking lows down around $6, but some analysts have targets up in the $30. The average might be somewhere around, say, $8.50 to $9.30, which implies big upside from where it's trading now, but...
The huge range suggests low conviction.
Exactly. It's just really hard to value a company like this at this stage in such a new field. The ratings reflect that too.
Mostly buys.
Holds. It leans towards buy or hold, but again, no strong consensus. You see ratings from overweight to market perform depending on the firm. It's a mixed bag.
Okay, so the pros are divided too. Let's recap some of the recent news drivers you mentioned. Positive catalysts.
Partnership milestones achieved, definitely. The NVIDIA investment was a big vote of confidence in their tech, completing the Exscientia merger, any promising clinical data, even early stage, starting new trials.
Platform advancements too.
Yeah, anything showing the Recursion OS is getting smarter or faster. And even broader things, like the FDA showing more openness to non-animal testing, that can be seen as a positive tailwind.
And on the negative side, what spooks the market?
Earnings misses are a big one, as we've said. Unclear or outright negative clinical results are probably the biggest fear. Analyst downgrades hurt. Concerns bubbling up about the cash burn rate.
Insider selling too.
Sometimes, yeah. Even if it's planned, heavy insider selling can make investors nervous. And of course, just broader market downturns can hit high-growth, high-risk stocks like this particularly hard. Oh, and potential tariff impacts we'll touch on later.
Right. What about short interest? Are a lot of people betting against the stock?
Yes, persistently high short interest. We're talking maybe 20–25% of the publicly available shares are being shorted.
That's substantial. Is it increasing?
The trend has generally been upwards, yes. And the cost to borrow those shares to short them is also pretty high.
Meaning there's strong demand from the bears.
Exactly. Combine that high short interest with very high implied volatility in the options market, often over 100%.
And you get what they call a battleground stock.
Precisely. Strong opinions on both sides. It makes the stock prone to really exaggerated moves, short squeezes upwards on good news, or sharp sell-offs on bad news.
Wow. Definitely a volatile situation.
Yeah.
Okay, let's shift to Chapter 5, ownership structure. Who actually owns RXRX? Institutions.
Institutions hold a very large chunk, somewhere in the 75% to maybe even close to 90% range.
Who are the big players?
You see names like Vanguard, ARK Investment Management, Cathie Wood's firm, Bailey Gifford, BlackRock, SoftBank, Mubadala, the Abu Dhabi Sovereign Wealth Fund, a lot of major players.
What are they doing lately? Buying more? Selling?
It's mixed, actually. Looking at recent filings, some have been increasing their positions, others have been trimming.
So even the big institutions are debating the story.
It seems so. High ownership suggests confidence from the professionals, but that mixed activity reflects the ongoing uncertainty we've been discussing.
What about insiders? Management, board members, early investors? How much do they own?
They hold a significant stake, too, collectively around 17% or so. This includes co-founders like the CEO, board members, and some of the venture capital firms that back them early on.
Are they buying or selling? You mentioned insider selling earlier.
Yeah, recent transactions have been dominated by sales. The CEO, CFO, others have sold shares.
Is that a bad sign?
It often raises eyebrows, but a lot of these sales are done under preset 10b5-1 plans. Executives often use these to diversify their holdings gradually, especially when a lot of their compensation is stock-based.
So it's not necessarily them thinking the stock is about to tank.
Not necessarily, no. What might be more notable is the lack of recent open market buys by insiders. But still, that 17% insider ownership does suggest their interests are generally aligned with shareholders for the long term.
Okay. Is the ownership concentrated? Like, do a few big holders control a lot?
It's relatively concentrated, yeah. Between those top institutions and the insider VC group, a large portion of the stock is in relatively few hands.
Which means their decisions can really move the needle on the stock price.
Definitely. Big buys or sells from a major holder can have a significant impact.
And corporate governance. Anything related to ownership stand out there?
Well, the board looks pretty balanced, as we discussed: founders, investor reps, former regulatory finance experts. Board independence seems reasonable on the surface.
Any potential concerns? Like voting rights?
One thing to always check with tech-related IPOs is whether they have a dual-class share structure where founders might keep shares with extra voting power. We'd need to confirm the specifics for Recursion currently.
Right. And executive pay. Likely heavy on stock.
Almost certainly. Standard practice in biotech. Aligns interests, but also leads to potential dilution and that insider selling activity. They do publish ESG reports, which give some insight into their governance practices.
Okay, so quick ownership summary.
High institutional ownership, but mixed recent activity. Significant insider holdings, though recent transactions are mostly sales, often planned. Ownership is fairly concentrated.
Got it. Now, Chapter 6, Risk Assessment. Let's use a SWOT framework. Strengths, weaknesses, opportunities, threats. Strengths first.
Okay, strengths. Number one is that proprietary Recursion OS platform, the automation, AI, big data. That growing data set is a key asset.
But partnerships too.
Absolutely. High-profile partners like Roche, Bayer provide validation and funding. Their balance sheet, despite the burn, is relatively strong for now with that cash cushion, experienced team, and board. And that strategic Exscientia merger could be a major strength.
Makes sense. Weaknesses? What are the internal challenges?
The big one. Lack of profitability and the high cash burn rate. It looms over everything.
The platform isn't fully proven yet, clinically speaking.
Exactly. It's promising, but needs successful drugs coming out the other end to be truly validated. The pipeline, while growing, is still somewhat concentrated. Dependence on partnership revenue hitting milestones, and just the sheer complexity of integrating everything they're doing.
Right. Opportunities. What could go right for them?
Continued advances in AI itself could boost their platform. The whole market for AI drug discovery is expected to grow massively. Potential for new, lucrative partnerships.
Clinical success would be huge, obviously.
The biggest catalyst, no doubt. They could also potentially license the platform or offer it as a service. And regulatory tailwinds, like more acceptance of AI and alternative data, could help.
Okay, threats. What external factors could derail them?
Clinical trial failure is the classic biotech killer app, right? A major setback for a key candidate would be devastating. Competition is heating up fast in tech bio.
Financing risk. Needing more cash.
Always a threat when you're burning cash like they are. Regulatory hurdles are always there. Getting drugs approved is hard. Execution risk. Can they manage the growth? Integrate Exscientia effectively?
Broader economic factors. Market sentiment turning sour.
Yes, all potential threats. And you specifically mentioned the 2025 U.S. tariffs in the analysis. How could those impact Recursion?
Right. The analysis flagged those broad tariffs, high rates on imports from China, Canada, Mexico, certain sectors.
So how does that hit a company like Recursion?
Potential for increased operating costs is the main thing. Think lab equipment, consumables, maybe computing hardware, chemicals, reagents. If they source those internationally, especially from affected countries like China, with rates up to 145% mentioned.
It could significantly add to their costs and worsen the cash burn. Supply chain disruptions, too?
Could be, yeah. It adds uncertainty. There might be some mitigation factors. Maybe pharmaceutical exemptions apply. Maybe they can shift sourcing, and their core operations are U.S.-based.
But it's a tangible risk to costs and supply chains.
Definitely adds pressure. The exact impact is hard to pin down without knowing their precise supply chain details, but it's a risk factor to watch.
Okay, that covers the SWOT and the tariff risk. Let's move towards wrapping up. Chapter 7. Brief conclusion and the end hook.
So, after digging through all this, what's the quick takeaway on Recursion?
It's a story of really exciting innovation, genuinely. They have this potentially transformative platform, big partnerships, a decent cash runway for now, significant potential, but also substantial risks. The lack of profitability, the high cash burn, the need for clinical validation are all very real challenges. It's classic high-risk, possibly high-reward biotech.
And the current valuation is based more on hope than current reality.
Largely speculative, yes. It hinges almost entirely on the platform delivering successful drugs in the future.
Okay, so given everything we've discussed,
Yeah.
the tech, the finances, the risks, what's one final provocative thought you want to leave our listeners with?
Yeah.
That end hook.
All right, here it is. Considering how heavily Recursion relies on cutting-edge AI and these complex global supply chains we just discussed, how vulnerable are they, really, to the shifting sands of international technology regulations and just general geopolitical stability in the coming years?
That's a really interesting angle, beyond just the science and finance.
Exactly. It's something else to keep in the back of your mind as you watch their story unfold.
Definitely food for thought. And if you want more deep dives like this one, make sure you subscribe to the Stock Analytics AI YouTube channel.
All the sources we use for today's analysis are linked down in the description for you to explore further.
And finally, just the usual quick disclaimer. This analysis is based on information available as of April 27th, 2025. It involves our interpretation, and there are always potential limitations.
Absolutely. This isn't financial advice. Please always do your own thorough research before making any investment decisions.